This August, crypto Reddit was awash with a ton of unhappy crypto fans with their pitchforks out. What was it all about? Well, it revolved around the controversial MCO token swap and the repricing of Crypto.com cards. Yes, the words scam and Ponzi have often been thrown around when it comes to Crypto.com, but seriously, this recent drama was on a whole other level. Now that the dust has settled, I thought it would be a good idea to tell you all about the token swap, explore the tokenomics of CRO, and give you my view on whether Crypto.com is just an elaborate Ponzi scheme. Finally, I'll share a few issues that I have with the project, so you can make the best informed choice about whether to use Crypto.com or not. Before I get started with all of that, there are a few things I need to say. Don't let my manly, dapper looks fool you. I am no financial advisor. Sorry, folks. That means this video is for educational purposes only. Be sure to consult your financial advisor before making any investment decisions. Also, if you've stumbled onto the channel for the first time, then welcome to the Bureau. I've made it my mission to create the one-stop shop for all crypto education. The cost to access all those nuggets of crypto wisdom is a smash of that subscribe button. Also, be sure to turn on those notifications if you want to be the first to know whenever I release another video. Right, enough jibber jabber, let's get started. I'm going to kick things off by going over what happened in the MCO to CRO token swap and explain why it caused such a stir. If you don't want to relive that again, then feel free to jump around to the rest of my analysis using the timestamps I've provided below. Oh yes, another thing I should mention is that if you're new to Crypto.com, then you might want to watch the video I prepared earlier. Here, I give you an overview of the entire Crypto.com ecosystem. So, if you are interested in that, you'll want to click right here. So, as always, it was a rainy day in London on the 3rd of August, and I rolled out of bed to find that there was one heck of a hullabaloo in the crypto space. Turns out that Crypto.com had practically killed off MCO overnight by announcing their MCO to CRO token swap. This really did come completely out of the blue. Basically, the crew at Crypto.com had decided that they were using the formula right here to revoke the MCO token. That worked out at a swap rate of just over 27.5 CRO for every MCO token. On top of that, an additional early swap bonus of 20% CRO was available for those wanting to stake that new CRO in the Crypto.com exchange for 180 days. Those that did ended up with an exchange rate of 1 MCO for 33 CRO. Now, that may not seem like bad news. However, the thing to know is that CRO has been on quite a tear this year, and that its relative value to MCO has increased substantially. So, people took issue with the 30-day averaging pricing method in US dollars. Crypto.com cards were briefly revalued at a ratio of 1 MCO to 100 CRO. Yes, that made the cards significantly more expensive to get overnight, and created the impression that MCO holders were getting thoroughly ripped off in the token swap. Commentators even pointed out during an AMA with the Crypto.com CEO a day later that the swap ratio should have been about 1 to 100. Put very simply, the MCO to CRO token swap looked fine when it came to being measured on fiat terms. However, it was no doubt a terrible swap deal when it came to the relative strength and value of the two cryptocurrencies. All that Crypto.com could say about that was that they could simply not afford to pay out at a swap ratio of 1 to 100. Honestly, I feel really sorry for those early MCO backers whose money Crypto.com used to build the ecosystem that everyone else is enjoying right now. They put up that money based on a white paper, the token economics outlined within that, and Crypto.com changed the rules of the game with no warning whatsoever. If I'd invested in that ICO, I would have been furious too. It is true that, upon creating the CRO token, Crypto.com assured MCO holders that the two tokens would not be merged. What happened on the 3rd of August can certainly be seen as a betrayal by MCO token holders. Indeed, some people did take to Reddit accusing Crypto.com of insider trading of MCO. It's alleged that in the months before the token swap announcement, Crypto.com stopped buying MCO on the open market and liquidated a lot of MCO from their hot wallet. Other Reddit users talked about how Crypto.com had talked about an MCO moon stopover, and how the token swap move flew in the face of those previous statements. It also turns out that quite a few people were saving up MCO to get a better card. It was a monumental kick in the teeth to wake up and see that Crypto.com had significantly increased the staking requirements in US dollar terms to get those cards. This also raised the barrier for new people to get Crypto.com cards too. And the general feeling seems to have been that premium crypto cards should be available to people like you and me, not just for those that have a ton of money in crypto. So, was everyone right to be mad on the 3rd of August with Crypto.com? Absolutely. Did Crypto.com fairly treat the people that backed them initially to make them the powerhouse they are today? I don't think so. However, it must be noted that fairness is super subjective, and I can understand why the swap ratio was what it was. There are business considerations like affordability which needed to be accounted for too. With all that being said, there were some positives that came out of the token swap. Firstly, the entire Crypto.com ecosystem is powered by only the CRO token, which streamlines things and makes it a lot easier for people to understand. Next, the short-term pain of the swap is a one-time thing. Also, CRO holders have kind of benefited as CRO has absorbed all that token utility previously owned by MCO. Now, I'm under no illusions that the chaps at Crypto.com knew this swap would not go down well. Yet, they forged ahead with it regardless. The key reason why it was highlighted in a recent AMA by the Crypto.com CEO, where he claims that the swap was key to managing the ecosystem's regulatory compliance risk. Put simply, ICO tokens are pretty risky when it comes to regulators, and the token swap, which got rid of the ICO token, was a way for them to manage and mitigate that compliance risk. Oh yes, Crypto.com quickly revised the pricing of their cards and actually made them cheaper than they were when MCO was used to stake and get one. Good news for those who still want to get their hands on one. Now that you have a firm grasp on why the MCO token swap was as controversial as it was, I want to dive into the tokenomics of CRO. Alright, so if you look at Crypto.com as a whole, you can see that there is strong emphasis on staking built into almost every facet of it. CRO token is used to get that top tier 20% rate of interest. You need to stake it to get those crypto cards, and you need to stake CRO to get those syndicate allocations for discounted crypto on their exchange. You can even unlock discounted trading fees on the Crypto.com exchange by staking CRO. So I'm going to level with you. Staking and unlocking Crypto.com ecosystem utility is what CRO is used for right now. Sure, you can use it as a currency. However, can't you do that with almost every other crypto? Now, with that being said, Crypto.com is damn popular and is seeing astronomical levels of growth. No joke, in about a year, they have apparently grown from 1 million users to around 3 million today. All that helps drive demand for the token to unlock those ecosystem perks. At the time of shooting this video, CRO has a circulating supply of about 20 billion tokens and a total supply of 100 billion. But are there any inflationary considerations which could impact on those holdings? To answer that, we'll have to take a look at CRO's token distribution. Basically, 30 billion tokens are allocated to secondary distribution and launch initiatives. So that basically makes up a fair chunk of the current circulating supply. In terms of the other 70% of the supply, it's held by the Crypto.com team and is allocated as follows. 10 billion will be used on community development, 20 billion on ecosystem grants, 20 billion for capital reserves, and finally another 20 billion CRO is going on long-term network incentives. With those sorts of numbers being thrown around, one may be concerned about potential token dumps from the team. It's also true that a slice of the 10 billion tokens for community development has already been used for things like airdrops. Oh, and it would also make sense to me if Crypto.com referral payments came out of this pot. With all that being said, what's important to note is that 60% of the CRO token supply has been frozen. The capital reserve and long-term network incentive allocation, making up 40% of the total supply, has been locked up until November 7th, 2022. The other 20 billion tokens for ecosystem grants have been frozen until the launch of the Crypto.com chain mainnet. However, just be aware that in an interview in August, Chris Mazalek, the CEO of Crypto.com, announced that the mainnet launch target date is the end of 2020. Yes, CRO holders could potentially be in for some inflation when that comes out. I now want to go back to those 30 billion CRO tokens allocated for secondary distribution and launch initiatives. The thing to be aware of here is that this distribution has been underway for some time now. It actually started way back in November 2018. If you look at the token release schedule right here, you can see that around 18 billion CRO has already been added to the circulating supply from this pot, with another 6 billion to be added by November 14, 2021. Yes, there will be some CRO inflation for the years to come. However, it is scaling down year on year when it comes to this element of the CRO token supply. When it comes to the ecosystem grant and the 20 billion CRO that's likely going to be made available at the end of the year, it is certainly something to keep an eye on. However, if Crypto.com spends those funds wisely, then the value and utility created for the ecosystem should offset any inflation here. The way I see it is that if Crypto.com keeps on growing its user base and driving demand for the CRO token, then things will ultimately be fine for price. However, if they fail to do that, then just be aware of a lot of CRO hitting the market in the next few years. I now want to move on to addressing the elephant in the room. Is Crypto.com a Ponzi scheme? Let's have a look, shall we? Search on Reddit for a few seconds and you'll find a plethora of posts about how Crypto.com could be a Ponzi scheme or some type of elaborate scam. At the surface level, these suspicions seem pretty well reasoned. After all, the Crypto.com perks are damn good, and I can see why people are claiming these to be simply unsustainable. After all, if you stake 1,000 CRO, you get that hot Ruby crypto card. That's about $180 in staked tokens at today's prices. In return, you get numerous benefits like 2% cashback rewards, a Spotify rebate worth $156 a year, $50 in CRO free if you sign up via someone's link. Oh, and the referrer gets $50 too. So if you tot up the cost to Crypto.com for acquiring one Ruby cardholder via a referral link, then you get a cost of around $256. I mean, let's be honest, is a regular Ruby cardholder going to generate more than that in fees? I don't think so. So that imbalance has some people worrying that Crypto.com is totally unsustainable, and that these rewards are only possible through the recruitment of new customers. Hence, the bog standard definition of a Ponzi. Some like to compare how cashback rewards work with regular credit cards to further fuel this narrative. Yes, it is true that if you have a Discover card or Chase Freedom reward card, that you'll be able to get around 5% cashback. That comes with a load of terms and conditions, of course, and is funded by merchant fees charged by the card issuer and late fee payments. Crypto.com is a prepaid card, and that means there are no late fees at all. Yes, the vast majority of those card perks are coming out of the Crypto.com coffers. I'm going to level with you. One of the main attractions of the Crypto.com cards are their fantastic rewards. However, I can see why many worry that the current rewards are unsustainable and too good to be true. The same is true of those incredible promotions you see in the Crypto.com syndicate, where they're giving away $2 million in Bitcoin at a 50% discount. Others also point to guaranteed returns, like the up to 20% CRO interest you can receive on Crypto Earn, as further evidence of something fishy going on. People are right to point out all these things. However, I think the problem is that those shouting Ponzi scheme are not seeing things in a wider context. Truthfully, I cannot see that there is any way that Crypto.com is breaking even on their crypto cards. However, that's okay. When it comes to product pricing, there is a pricing strategy known as a loss leader. That's when a product is sold below its market cost to attract customers to the business and stimulate sales of other more profitable products or services. Businesses using this strategy simply don't care if they break even or even make a loss on a single product. Instead, what matters is their net position of the lifetime value of the customer across all their products. It's a bit like getting drawn to a store because there seems to be a great deal on Ben & Jerry's ice cream. Yes, some people just buy that tub of sweet, sweet goodness. However, most people grab a few things on the way out, or in fact do their weekly shop in that supermarket due to the promo. Indeed, Crypto.com have stated that it is their strategy to leverage payment solutions as the primary tool for driving adoption and user acquisition. That would be those crypto Visa cards. Then they go on to say that trading and financial services are the major sources of revenue, which they intend to upsell to users. So Those crypto cards are merely a customer acquisition tool for the entire Crypto.com ecosystem. Yes, Crypto.com does have revenue-generating products. However, there's a load more in the pipeline, like exchange margin trading, for instance. The Crypto.com CEO also disclosed in an interview that the majority of revenue today comes from trading, and that in the future, a big chunk of that revenue will come from lending. In other fun news, the business is apparently on track to have a profitable year in 2020 for the first time. To be honest with you, it's probably too soon for anyone to know what the true lifetime value of a customer is in an ecosystem like Crypto.com's. After all, not all the elements have been built out yet. When it comes to products like exchange margin trading, a reasonably good example with a pretty established track record is contract for difference, or CFD trading. These platforms basically allow people like you and me to speculate on stocks and commodities with leverage. One big stock market listed CFD broker is Plus 500. But how much is a CFD trader really worth when it comes to their lifetime value? This is where it gets a little bonkers, folks. Plus 500 are willing to pay up to $800 as a flat fee to anyone who sends them a trader. That's known in the industry as a CPA, or cost per acquisition. Sure, that figure varies depending on what country the user is from. However, the point is that Plus 500 is making a short-term loss on CPA payments made for qualifying traders. However, they frankly don't care about that because they know that traders from those high-value countries are on average worth a heck of a lot more to them than $800. Despite the cost of acquisition payments, Plus 500 still made $320 million in net profit in the first half of 2020 alone. Now, bringing it back to crypto, there are a number of different methods to acquire customers in the space. One such popular method is cost per click, which is an advertising model used to drive traffic to a website where the publisher is paid for each time the ad is clicked. An example of that might be something like Google AdWords, which seemingly places that ad at the top of Google when someone searches that hot keyword. Here's the deal. The cost per click for crypto-related keywords can be insanely high. How much do you think people were paying for a single click on keywords like how to buy cryptocurrency in Australia or AUD Bitcoin exchange? The answer is between $37 and $50 for a single click. The thing with this type of customer acquisition spend is that it doesn't even guarantee that people will actually buy your product or service. However, the loss leader pricing strategy means that you actually only pay that acquisition cost if a person buys something off you. That's why some see this as a less risky acquisition strategy. With all that in mind, maybe the perks on offer for the Crypto.com cards, the crazy syndicate promotions, and the Crypto.com referral program don't seem so outrageously bonkers after all. Either way, the success of this business model basically all hinges on Crypto.com being able to successfully cross-sell customers to profitable products and generate profit. If they fail to do that, then that aggressive loss leader strategy will almost certainly come back to bite them. How fast is Crypto.com growing? Well, in September last year, they had 1 million users. Flash forward to the time of this video, and they claim to have about 3 million. So that customer acquisition strategy seems to be working damn well. Oh yes, when it comes to the guaranteed returns from Crypto Earn, one thing that many people don't appreciate is how expensive it is to get business loans. You can see that from the deal right here. Yes, that is a terrible business loan. However, the point is that paying 20% interest for access to capital is still worth it for some businesses. That's essentially what's happening with those CRO lending rates. When it comes to those crazy Crypto.com syndicate promos, I'm sure you all know how much money the likes of Binance make. Yes, there are discounted Bitcoin promos that Crypto.com are surely paying for out of their own pocket. However, Crypto.com claims that most of these promos are paid by the projects that are listed on the exchange, with all the proceeds going back to the project. So it's not as crazy as it might first appear. Crypto.com, of course, uses those flashy promotions to acquire even more ecosystem users. The hope being that they lure people like me and you in and get us using those Crypto.com services that are profitable for them. So yeah, I understand why some people see Crypto.com as a Ponzi scheme. However, when I scratch the surface, I can only really see business strategy at work here. Whether this will be successful or not, of course, is a different question entirely. There's so much more I want to say. However, this video is getting really long, so let me quickly wrap things up. The reduced barrier to entry to get Crypto.com cards after the public outcry is the top thing that came out of the MCO token swap. With all that being said, I really do feel that MCO token holders were not treated in the proper way at all. After all, these are the people that made Crypto.com possible. Sure, the business might not have been able to pay out a better rate, but that does not excuse springing the token swap upon people without warning. I would have liked to have seen clear forward guidance. Killing off MCO is a really big deal, and I don't think it was properly thought through. You can see that by the fact that Crypto.com quickly changed back CRO staking requirements for their cards after the public outcry. The good news is that Crypto.com changed the pricing of the cards and listened to what the community had to say about that. When it comes to the tokenomics of CRO, you should be aware of the inflationary headwinds coming up. And the value of the token is basically dependent on the continued growth of Crypto.com. If that growth fails to materialize, then CRO holders might be in for a tough time. And finally, when it comes to the big question of whether Crypto.com is a Ponzi scheme, I've shared my view on that matter. However, I would love to see a financial audit on the business. That being said, it's common for many fast-growing fintech companies to choose to hold off on financial audits until they develop an established system of internal controls and are considering going for an IPO. And that's it, team. My thoughts on Crypto.com. Now, if you like taking advantage of loss leader products, then you might want to check out my Crypto.com links in the description below. Get a Ruby card or better, and we both get $50 in CRO free. Or you might want to try out the Crypto.com exchange and grab that discounted crypto from the syndicate. That certainly helps support the channel. And one more thing, I've actually also started my very own loss leader trading promotion too. I've put up $2,500 of my own money this month for you people. Check out the link in the description for more details on that and how you can start earning Coin Bureau points. Remember, points mean prizes. It's now time to hear your thoughts on Crypto.com. So, what do you think about the token swap? Do you think the project is a Ponzi? Let me know in the comments below. And finally, if you got value from this video, then moon up the likes. And if you want to see more videos from me, then don't forget to tap that subscribe button. Just one more thing I need to say. If you enjoyed that video, then you'll love my weekly newsletter. It's basically my take on all the important trends and topics that may have flown under your radar. I also take a look at some really interesting projects and coins that you just can't afford to ignore. That be of interest? Well, quickly head on over to the description. I've linked to my sign-up form down there. All you need to do is enter your email and hit submit. Confirm the subscription, and that's it. A Coin Bureau insider. You're now all set and ready to receive my next email. And I will be seeing you very soon.